Hello everyone, and welcome to this week's in-depth financial market recap. Over the past week, global financial markets have been searching for balance amid persistent inflation concerns and dramatic transformations within the technology sector. A combination of key economic data and major industry developments has painted a complex economic picture for early May. Let us first turn to the latest developments in the macroeconomic landscape. Over the past week, market expectations for Federal Reserve rate cuts suffered another major setback. The latest U.S. annual CPI reading remained elevated at 3.3%, exceeding the expectations of nearly all major institutions. In recent public remarks, Federal Reserve Chair Jerome Powell adopted an increasingly hawkish tone, emphasizing that rising energy costs driven by geopolitical conflicts are making inflation highly persistent. Although the U.S. economy achieved 2% GDP growth in the first quarter, demonstrating considerable resilience, this has in turn given the Federal Reserve greater confidence to maintain interest rates within the 3.5% to 3.75% range. The long-anticipated policy pivot investors have been waiting for still appears far from reach. Shifting our focus to the technology and semiconductor industries, the sector experienced a stark two-speed market this week. Fueled by explosive growth in AI ASIC demand, MediaTek saw its market capitalization temporarily surpass USD 165 billion, with its rapid surge even triggering trading restriction measures by the Taiwan Stock Exchange. At the same time, the memory chip industry is facing a structural earthquake. As major manufacturers fully transition toward more advanced 3D NAND processes, the traditional 2D NAND market has encountered a severe supply shortage, with prices for certain mature process products tripling within a single week, triggering panic across downstream supply chains. In addition, following government-backed funding support, Intel is attempting to regain competitiveness in the fierce AI race through deeper collaboration with TSMC, adopting a dual-track strategy combining outsourcing and in-house development. In terms of secondary market performance, regional trends showed clear divergence. After reaching fresh record highs, the S&P 500 and the Nasdaq Composite moved into a narrow high-level consolidation phase under the pressure of geopolitical tensions and inflation data. In contrast, the Malaysian stock market delivered a strong performance, with the benchmark index firmly stabilizing above the 1,648-point level, supported by banking and blue-chip stocks. Meanwhile, yields on 30-year UK government bonds climbed back to levels last seen in the 1990s, and these highly attractive returns are now encouraging global long-term capital to reallocate toward fixed-income assets. Looking ahead to next week, global markets will face a true inflation week test. Beginning on May 12th, the United States will release a series of critical economic data, including CPI, PPI, and the closely watched retail sales figures. More importantly, AI bellwether NVIDIA is set to release its earnings report. This will not only test the true strength of the AI premium, but could also directly shape the direction of technology stocks for the remainder of May. Thank you for watching this week's financial news recap. Wishing you successful investments, and we'll see you again next week.